the lenders, but it's not necessarily that they did anything wrong because they actually were very, reasonable with us for a number of deals. But I would say that, let's just say recently, within the past year or two, I'll keep it open-ended. There's been a couple lenders that I've done business with that have done just that. And frankly, I wasn't really realizing it until I looked at everything more closely. And here's the challenge: that when you run a project, let's say you have a project that's 100 grand of a construction, and let's say hypothetically that the lender gives you what's called interest escrow, which basically means that you're going to roll your interest payments for the duration of the project and maybe an extra 3 or 6 months, just to have a padding there into that loan because your deal is so discounted, which thank God we've had some deals like that, where the numbers can support that. Well, that sounds good in theory, but frankly, if you're rolling construction escrow into the loan, which you're going to do with our money, and the question of how the interest gets applied is another thing. And then also if you're rolling your interest payments for a period of time into the loan, well, the interest payments, you're paying a percent on top of the loan initially. So let's say, for example, the loan's $500,000, for example, because these are some bigger projects we're talking about now. So $500,000, and let's say I'm paying 1%, just to keep it simple, that's $5 grand a month. So $5 grand a month, but let's say of the 500,000, let's say 200,000 of that is actually for construction, and let's say 50,000 of it is for interest. Well, the 200,000 I'm not using until I actually do the work, until I get the monies dispersed from escrow, and I'm funding that first payment. And so for me to pay interest on something I'm not using seems illogical, and actually I think it also is. I think that there needs to be a lender. There is lenders that will only charge you interest on the money you're drawing as you draw it. It's more complicated from the track, but it's definitely more incentivizing and more realistic of what people want to see, especially as you get these bigger loans. Now, second thing though is the interesting, the kicker for me, if you would, it's almost like compound interest in the next part, because if I'm putting $50,000 of interest payments into an escrow, that means that I'm paying the 1% of that, which is $500 a month, to have the same $5,000 a month in an escrow account to be held for me. So I'm basically paying double, if that makes sense. I'm paying the 500 on top of the already, whatever that works out to be. I can't do the math right in my head, but it's like double the interest, if that makes sense. You're paying interest on the interest. That doesn't make a lot of sense either. What you're better off doing is, if the deal is that good, you should be talking, if you need to, talk to a private lender, a family member, a friend, or somebody you trust that you've done business with before, to actually fund that piece of it, to fund that gap, because your lender is only going to charge you way more. In my opinion, it's going to be way more, even though there's a convenience factor to it of having the interest escrow built into the loan. It's convenient, yes. It's like simple. You don't have to put money into another bank account. It just gets taken out every month, which is also kind of maybe not the best thing for some people. I'm not really sure if I like it or not. But that scenario is costing you more than if you were to have your own capital in your own account and then paying that interest payment every single month. So the cost of capital is definitely increased. So don't be misled. And I'm not saying that anyone did this to us. It just was not a thing we discussed really in detail. The interest rate that we got is actually higher because the interest rate that we're paying is on top of interest and also construction escrows that we're not utilizing. So the effective cost of capital, I can't give you a number, but it's probably at least another third more than what it really is. So if we're getting, let's say 9%, it's probably more like 12% effectively of what it would otherwise be if I had it as drawn. You see what I'm saying? I don't know if that makes sense, Rich, and everyone who's listening. If that doesn't make sense.
Yeah, and that I think that question came from Tom Angelucci, who's here too. He just texted me because that's from me.
Oh, yeah, nice. Very cool. So I just took care of that one. So Tom, good to see you here, man. There he is. He's coming on the meeting. Is he
I
there?
just popped him on. You want to say hi, Tom? I don't know where if you're working or what.
Yeah, I'm on another Zoom too. But hey, guys, how's it going?
What's up, man? You're doing like the phone thing with the Zooms, though. Multiple Zooms. That's good. So then another question, which might have been, I'm not sure if it was from Tom or not, but from somebody that said, I usually figure that I will clear about 93% on the resale, about 7% out the door. I think directionally that's a good number because you talk about 5% commissions, 1% really transfer fee, and like 1% for closing costs as a seller. That seems about right. I would agree on that. And I would also say that, interesting, you say 93%. So between like 90 to 95% before like the market's been crazy, and it's not every place of New Jersey or any place in the market in general has this happen, but before the surplus of demand and the shortage of inventory started happening really in a big way, you were seeing like sale to list price ratios of like about 90 to 95%, meaning that if you were listing a property for $500,000, you would take 5% off the top, which is like 25,000. You probably sell it for 475, and that was kind of like the average. A lot of times you're seeing now in certain markets within New Jersey, especially Northern Jersey, is that the sale to list price ratio is actually like 105%, meaning that you're getting over asking about 5%. And those are the markets that are even more competitive. Those are the areas that have even less inventory, that have more demand. Everything economically is pressures on both sides to pull you, make it more difficult to enter into that market. So anyway, I'm just saying that's on 93%. I'm thinking about the numbers here. That's another interesting sort of ratio you could use. I'll give you guys one more little nugget, and then we'll open up for any final questions. On some of the stuff that I was doing in the beginning of the year in Florida to get kind of Florida started, we did 2 projects successfully already in Florida, and I'm proud of that. We did one in Spring Hill, and we did one in Newport Richey. And I'm talking about Douglas J Development, purchased, renovated, and sold these projects. And I was in New Jersey and had a team boots on the ground in Florida doing it while I was still in New Jersey, which is really cool. And virtual rehabbing is a whole nother avenue we could talk about sometime. It's not perfect all the time, but it's not that complicated either if you have the right people working it. So fact of the matter is, we did 2 successful projects down here in Florida. We have a 3rd one underway, but in the process, we created a spreadsheet that I was given to certain people in Florida to kind of help them understand my buy box, right? This concept of buy box. And I talked about this with one of our clients as well. We kind of defined some of it today in our example, saying like $50,000 minimum net profit. That could be 40, that could be 70, it could be 100, whatever it is for you. We talked about like a percentage wise or whatever that looks like. It could be different for every person. It could be 10%, it could be 50%. I don't know, like 50, you're not going to ever buy a deal probably, but 10%, you could buy a lot of things. Fact of the matter is, one of the other aspects of this was that if you look at it from an aggregate perspective, and some of the things we're doing as we continue to grow is create some ratios of, for example, and this, everybody can do this differently, but a ratio of renovation expense to profit, or profit to renovation, for example. So if I put in $40,000, I want to be able to make a minimum of X. Some people say 1-to-1. In New Jersey, it's actually hard to do that from my experience. What we've averaged in New Jersey on the deals and on the onset is different than what actually nets out at the end because of different things that happen in the deal. But let's say on average, if you aggregate everything, is probably about 50%, 0.5 basically, in terms of like, if I'm renovating for, let's say more realistically, $70,000 of a renovation, I'm lucky if I walk away with $35K net on that project, usually. In Florida, and this is not to switch everyone's gears of focus in Florida, but I'm telling you that these deals exist. It's almost the opposite in some scenarios. Like on a couple of projects we put in on the one property, we put in like less than 20 grand and we netted about 20 grand. So we basically, and it was a small deal. It was a quick 3-month, purchase, renovate, and sell within 3 months. That one was so easy. It was almost ridiculous. I could do a lot of those at a time. If I could, I would, and I probably can with some more focus. But the fact is that's like a 1-to-1, 100%, ratio. Some cases there's like 1.3, 1.5, which means that I'm actually making more money net profit, including financing, than what I'm even spending on the renovation. And you might say, well, why does that even matter? Like, what are you talking about? Why does this really matter? Just arbitrary numbers? It's not arbitrary, because if you have to spend a bunch of money on a project and speculate whether or not you're going to walk away with that much or more than that as a net profit, that's not necessarily a good thing to speculate. You want to have some level of certainty to walk into a project, put in some new money besides the purchase. Because remember, you're buying it at a little bit of a discount, but a lot of times in the market right now, you're buying it to as-is value or around that number. So the only way you're going to build net profit is by making investments into the renovation that's going to turn a return on investment, basically, that's going to be profitable to do. So you have to find projects, and this is something that we're working on as a company to define more specifically what these projects look like. Typically, they're bigger renovations, value-add real estate, like added levels, additions, new construction, even in some cases, where these large renovations almost, they're forced appreciation. Some of the people out there that are in the real estate world, even online, are talking about this concept a lot lately, because not as many people are willing to participate in these large renovations as far as buying and renovating and selling, because they don't have the resources, the capital, whatever. The cool thing is, and this is sort of like a liaising into some of the conversations we can have individually, is that we have the capacity, we have the team, we have the deal flow, we have the funding to basically do these larger renovations and do them well. And so what we need more of is we need more good people to work with us on these projects. That's why we talk about the joint venture opportunities. So if you don't know by now, we have a YouTube channel that I've been putting up certain content. I got to put up some more content and continue to do that with Rich's help and the team's help. If you go to YouTube and you type in, I think either Doug Beck or Douglas J Beck, I got to find it. We can send it to anybody who can't find it. You'll find there's a playlist that talks specifically about joint venture programs that we offer. There's like 3 different options. I'm not going to go into all those details. But fundamentally, there's various ways, even beyond some of those things we talk about in the videos, that you can work with us. And so I hope that this message is coming across to the right people and that you're interested in working with us in some capacity. Even if you're not, we're happy to help you in any way. If you just pick up the phone and calling us, and asking a question or getting on the phone and talking about a deal. We have different ways we could help you with those scenarios. So don't hesitate to reach out to us. I do see that someone has another question here. So let's see what the question is. It says, if I'm using a private gap funder, what's a good return on the money that I should offer? For example, 50K gap funder. That's a very broad question, but I would say, and this is not, again, I want to be careful. I'm not soliciting for any funds here. This is not a conversation about you giving me your capital to invest into a project. Obviously there's projects that come up and we're in the business, and a lot of you are in the same business as us. So we could joint venture in certain ways, but bottom line is, as a target, I mean, the marketplace as a general sense would be same kind of numbers as far as a private money lender. Like I told you about the hard money, the private money lenders are kind of expecting, and the market tells you this if you talk to people, between 8 to 12%. It's been the way since I think I started in the business. It's it's unlikely to make passive. I'm talking about passive. If somebody who's passively putting capital to work as a gap funder, it's not likely to get like 20 or 25%. In fact, there's even a point where it becomes illegal, for I understand it, to make a certain amount of interest for lending money. Don't ask me, I'm not an attorney on that part, but there's definitely some limits of what you can make. However, there's an opportunity to joint venture with folks like us, where we're not just going to give a set return. We'll actually share in the profit with those people that want to partner with us. And we've done that, many times in the past. So that might be a better fit for some of you that have capital or to have experience or to have a deal. And that's where the joint venture concept comes into play, where you can check out our videos and talk about how we can work together on a project. And now the return you're getting as a private, quote unquote, private investor, private lender just goes from, that 8 to 12% to maybe 20 or 25% potentially, with the profitability, being the way that happens. It's not from just a set return per se. Every deal is a little different. If you're curious more about that and how we operate, we're happy to talk with individuals, one-on-one about that, and try to see if you're a good fit, see if we're a good fit for each other. I'm happy to have those discussions. Just not to put them on the spot, but Tom, I'd love to do that with you. There's a couple of things actually top of mind, not just from a capital perspective, but also from other things you do that I think we could work together on. We've been talking about it intermittently over the past many months. I'd like to really revisit that with you and other people that have the experience that you have as well. We find value in working with good people that have the right intentions, that have also the right experience and the right resources. And we want to match up to those kind of individuals and those kind of companies. So that would be something that we'd love to discuss further. The YouTube channel, let's see, I'm going to give you, Rich, anything else before I give the YouTube channel?
No, while you're looking for that, I just, like I said, wanted to share one little story, especially for a lot of the beginners out there. I know what Doug went through was kind of a lot of stuff, and it's a little scary. I'm like, where are you going to come up with, this $80,000 for gap funding and all this kind of stuff. So real quick story. My very first deal that I did was in Atlantic Highlands, New Jersey. Found it with the help of a realtor. It was a great deal.
Hey, what's going on?
I was currently,
sorry about that.
Currently in the actually the mentorship program with Doug at the time. So I got pre-approved for hard money. So I had that side of it. I found a great deal, but I didn't really have any money at all. So, I was like, but I had a great deal. So I went to Doug and I was like, hey, Doug, listen, I need this kind of, this kind of gap to do this deal. It's a great deal. I did all the numbers that he explained. So he was able to see the profitability of it and all that kind of stuff. And, he was interested in partnering with me on it. We were able to strike up a deal. And so basically I was able to get that property renovated, sold and everything. And the only thing I put out of my own pocket was the $1,000 deposit. So just because you don't have any money does not mean don't pass by good deals. If you have a good deal, there's a way around that. There's a lot of people that have money that are looking to invest, including us here at JDL,
Yep.
On good deals. So if that's your scenario, if you want to bring that to my attention or whatever, I'd be more than happy to take a look at it, see how great it looks, and see if we can partner with you on that aspect of it too.
Yep.
So that's kind of a story that, just a lot of new people are just kind of freaking out because they're like, oh, I don't really have that much money. But if you have a good deal, that's kind of all you need almost.
Absolutely. And I think that's 100%. I appreciate Rich giving me that opportunity to work with him on that project. We got to know a lot more about each other and actually kind of brought us to where we are today, where Rich helps run a good portion of what we do at JDL and also Douglas J. So I appreciate you, Rich. And I appreciate all the things you've done and helped us do and continue to do. Looking forward
Working
to
hard.
Absolutely.
Have a great year next year too.
Yeah, man, 100%. So yeah, there's a lot we could talk about. I appreciate everybody being here. I want to be mindful of the time. It's at the top of the hour. We typically like to do this for like about an hour every other Thursday. If you guys have any feedback for us as far as how we can improve, what we can do differently to make it more relevant to your questions or your situation, don't hesitate to reach out. Again, quick reminder on the websites that you should check out. Number one, jdlventures.com will give you sort of the overall how our company operates, which has predominantly been wholesale deals, but we have a lot of different facets of what we do. On that website, you'll find on the top menu, you'll see a thing that says investors, I believe. So if you're looking for deals, be sure to subscribe to our list, number one. Secondly, if you're looking to get some additional access to information and also resources, strongly consider you check out the mentorship program, which really, for some people, is more of like a mastermind. I talk about this internally, where you join a group of people, a small group of people, as well as having some one-on-ones with us to talk more specifically about what you're looking to do, and not just talk about it, but actually implement and focus on what the next step is. Who do you need to be introduced to? One of my clients I just introduced to the hard money lender that I'm using on almost all my deals. Another client, we just did this review that we had today, but we did it in a deeper way with a real deal that they're looking to put an offer in at. We talked about what the offer could be, what they should be looking at range-wise as far as the profitability. What are the different considerations? Can they offer more than what other people are offering and be able to make more value in the renovation part of it? All those factors come into play. So we don't just talk about theory, we talk about real life stuff. And so that's super important for you to understand. Check out flipmoredeals.com about that. And I'll just say one more thing, that if anyone is here that either is a business owner outside of real estate or has a friend or family member who's a business owner outside of real estate, I'm offering with Rich's help. Rich is also a previous business owner himself before real estate in the fitness space. We have a lot of experience and a lot of process and technology as well that can help business owners, not only just in their own business, but also bridge the gap from being an entrepreneur outside of real estate to actually adding real estate as another avenue of how entrepreneurs can create income for themselves while their business is continuing to grow. So the way to find out more about that is if you go to douglasjbeck.com, www.douglasjbeck.com. There's a webpage that has my information and our company, a little bit about that. You're going to see that website kind of evolve over the coming month or so as well to talk about all the different businesses that I'm involved with and that our company operates under. So you'll see more about that. But if you want to pass that to somebody else, I very much appreciate it. We can help them understand, again, about real estate, but also about the business principles that help any business kind of go through the challenge we've seen this year and into the coming year of COVID and all the uncertainty and figuring out how to staff up or scale back or scale up, whatever it might be for that particular business. So looking forward to talking to you guys some more about that. And I appreciate you all being here. Tom, good to see your name, man. Looking forward to hopefully catching up real soon about some things. And everyone else, thank you for being here. We'll talk real soon. If you didn't catch the whole meeting, I'm sorry that you're just catching this now. Check out the replay. It'll be on Facebook. And again, if you're not on our list, go to jdlventures.com and you'll get notified about these meetings.
This will be on our YouTube channel as well.
It'll be on our YouTube. Perfect. Awesome. Thanks a lot, guys. Rich, thank you.
You got it. So long, guys.
Yeah.
Till 2 weeks from now. I'll see you later.
Yeah. Happy holidays. Merry Christmas. See you guys.
Exactly. See you.